What's going on, guys? How are you? This is Shocks and this is ShocksCapital FX. Today we are going to talk about SMT divergence and ICT strategy that works very well with prop firms and your day-to-day trading. So we're going to talk about day trading here, and our time frame that we're going to be using is 50 minutes. So this is going to be a little bit different from the SMT divergence you might have known or you might have learned. So normally we consider the graphs of Euro USD and the DXY index, right? So most of the time it's just an inverse of each other, right? So the Euro USD chart is an inverse of the DXY index. So just consider those two. But today we want to use the correlation of Euro USD and GBP USD, and we want to do the same for EURGBP and GBP JPY to see if you can find some correlation and if you can use the SMT divergence theory to kind of trade this chart. So from what you are seeing here, let's just assume this first one is chart number 1, this is chart number 2. We can interchange this can be GBP USD and this can be Euro USD, or this can be Euro USD while this is GBP USD. So what we are doing here is the first chart, which can be GBP USD or Euro USD. So let's just say first chart, second chart, right? So what we have here is a break of a break of a high, as you can see here. Then on the second chart we have price failing to break a high. Remember, when you talk about breaks, we are not considering pins, we are considering candle close, right? So what we are saying here is here we have a move above this high, which is more of a liquidity grab above the high, and here we don't have such kind of of price action. So this also can be something like this, where we have the second leg failing even to match the first leg, as you can see here. So we can have variances or differences or variations of the same charts as I'm telling you here. So what you do is you wait for these scenarios to first present in the market. Then what you are going to do is you are going to be trading the chart with the equal lows or with the failed swing. You are not going to trade this one with the stop hand, right, or the liquidity grab, as you see here. So you are waiting for price to go and break this low, as you see here, or this low, as you can see in this picture. This is what you are going to be doing, and this is the break, which means this is a break of market structure. Some of you these days are calling it change of structure, whatever you want to say there, but you know what it is, a break of a low. You wait for this, then you wait for a retest to an order block in this region, or a fair value gap just under that region, and the stop loss, remember, is going above the structure. So let's go to some charts and try to understand what we are talking about on the chart. So we are starting with Euro USD versus GBP USD and see if we have this correlation and if we can take advantage of it. Right, as you can see here, we have Euro USD and GBP USD, as you can see, right? So I want to take your attention here, what you see here in this area, right? GBP USD, don't concern yourself with what is happening there. I want your eyes here, where I have drawn this line. You have price breaking this high, as you can see. This is an Asian high, right? Then you come to the other chart on your right. You have this high and this high. These are equal highs, right? Then price goes on to break this one, which is the low, change of character, break of market structure, whatever I want to say, depending on where you learned your ICT, right? So this is a break of structure, and if you come this side, this is another break of structure, right? And remember, I said you trade the one with the equal highs, which is this one. So you are going to wait for price to come and retest this order block, and your entry would have been at that particular point, or you could have traded this one. If you are in my Telegram channel, you know that we did trade this entry where break of structure, then retest of this order block that you see here, and you traded, and the trade hit our take profit around this area, right? So I'm just showing you what you need and how you can be trading this. And if you are into prop firm trading, this is the best strategy that you can employ. And as we go further with the video, I will show you other confluences that you can employ when you want to be trading this on your prop firm account. And if you don't have, or if you don't know what prop firm trading is, click the link in the description down below and be sure to register with Funded Next and get 15% profit in your challenge phase and 80% in your live account. Try it with this strategy. So with that being said, let's go and look at GBP JPY and EURGBP and see if you can have something that you can take advantage of and trade as you go. Right, so this is GBP JPY on your left and EURGBP on your right. So what we are doing here is on GBP JPY, look here where we have this high and this side, we have equal highs here. But you look at the next chart, which is EURGBP in this area, we have what? We have a failure of price getting to the next high to form a equal highs, right? So this is divergence, SMT. So this is a variation that I'm bringing to you that you can use instead of using only the Euro USD and the SMT. So this is another way of looking at it, right? So remember, I said you trade the one with the what? With the equal highs, which is this one. Remember, I said we are considering what candle closes. That's why you see I'm not marking this pin here. I'm not marking that pin because it's manipulation. So we want this candle close and we have this. So these are our equal highs, right? So with that being said, we have break of structure here, BMS, and we have the same on your right, which is break of structure here. So that is a confirmation of your divergence, right? If you see price not breaking that, then your divergences will be what? Will be wrong. So the BMS is your confirmation of the divergence. What you do next is you trade the one with the what? With the equal highs. In this case, you are going to be trading GBP JPY, and with GBP JPY, we are going to be looking at what? At order blocks, as you see in this area. So your entry in this case would have been here. Sorry, your entry would have been what? Oh, sorry, okay, your entry would have been at this point, and look at what price did there. So this is how you can take advantage of SMT divergence when it comes to a related pairs. Or you could have traded something in this area here. So you could have waited for price to come and retest this and trade likewise. So this is what we are saying. So with that being said, let's go to the higher time frame, and I want to show you something that you can use as a confluence with this SMT divergence. Remember, we talk about order blocks, and in this area we had something that looks like an order. Oh, let me just say we had an order block in this area, right? So this order block, then we go to the M15 and we start looking for our divergences, and you see the divergence is happening right in the order block. We had something again on GBP JPY. So when you are looking at your SMT divergence, don't just look without confirming with your higher time frame and your points of interest. Be sure you have a point of reference there. You just don't need or don't want to be looking at SMT divergence anywhere on the chart. You see retest here, and we can talk about our divergences where we have in the EURGBP chart, we have price clearly in the order block, and here we have the same. So when you talk about divergences, you can be rest assured that you are doing something that is in sync with what is happening on the higher time frame. And this break of market structure should be your confluence number 3 and your trigger per se. So it shows because it shows you the direction in which price is most likely to to go after you consider everything that you need to be considering. So this is what I wanted to tell you. So before I go, let's just summarize what I was saying. Number one, you need to be having an order block on the higher time frame. Then you can come to the lower time frame. Let's say you have H1, you go to M5 and look at these divergences the same way. When you go to GBP, JPY, Euro, JPY, H4, you go to M15 and look at these divergences. So just you have to know the correlation between the time frames that you are using and the correlation between the pairs. So I've just shown you two pairs. If you want more that follow this same rule or this same method, you can go and look at the charts that you think are related and try to do your homework. And if it does, you can tell me in the comment section all those charts that you think follow this same criteria. So guys, it's been nice having you here. Thank you for watching. I'll see you in the next video. Trade what you see. Hands to the head. Salute.